Welcome to Futures Fever, where we dive deep into the world of futures trading and uncover opportunities no matter the market conditions, because volatility is simply an opportunity to find profitable trades. So don't sit back and relax, but sit up and engage as Futures Fever, powered by Apex Trader Funding, starts right now.
What's up, traders? Welcome back to an episode of Futures Fever. I'm your host, Kevin Dubriske, and we've got a pretty good show in store for you today. So we've had a lot going on in the economy and globally that's really impacted the market. So we're going to go over some daily charts on the ES, which is the S&P 500, the NASDAQ, gold, and oil. And we're going to cover what range and what direction they're trading in so we can find some good A-plus setups. First, I want to cover what is Apex Trader Funding and how you could use it as a retail trader to get started and make profits in the market. So let's bring this up. So today on what's on the agenda today, we have how Apex Trader Funding works, live market insights, and we're going to do a giveaway as well. So we do give away a free Apex Trader evaluation account every week. Make sure you guys fill out the link in the description below. So why trade with Apex Trader Funding? Apex Trader Funding gives traders access to funded accounts, removing the need to risk personal capital. So this is really helpful because guess what? Before there were prop firms, before there was Apex Trader Funding, there wasn't much leeway for new traders, right? To trade futures, you usually needed $10, $20, $25,000 to trade futures. Now you only really need about $30, $40 when they have a sale. Buy an evaluation account, you pass the eval, you get funded, and you're still only spending less than $200 of your own personal capital. So that's where prop firms like Apex Trader Funding really benefit us new traders who might need that helping hand to say, hey, you know what? I don't have 20 grand to put down right now. I don't have 10 grand to lose right now. But I could start with a prop firm, I could show some consistency, and I could get paid out. Yo, what's going on, Ozzy Fairchild? How's it going? Good morning. I hope you guys are doing well. Happy Wednesday. So you get access to firm capital to trade futures. There is no worry that if I blow this account, Apex won't let me trade with them anymore. That is not the case, guys. Apex is always here to help benefit us. So if you blow an account, whether it's an eval, a funded account, they do not give you any type of penalty, right? You blow an account, you start right over with a new eval. You earn 90% of your profits. So this is huge, guys. This is where they really set aside from some of the other prop firms. They give you a 90-10 split, and that's after you keep the first 100% of the first 25,000 you make. So guys, that's huge in and of itself. You keep the first 25K 100%, and then a 90-10 split after that. And again, you're risking very little of your own personal capital. So why not trade with a prop firm like this? Zero personal liability, you trade stress-free, and it's an efficient way to scale and grow as a trader. Again, we mentioned earlier and mentioned in previous episodes how great it is to trade with prop firms, especially Apex, because it gives you the ability to copy trade to not one account, 5, 10, but up to 20 different accounts. And if you copy trade one account to all 20, and let's say you're averaging $100 a day, well, 100 times 20, you're really looking at $2,000 a day. So it's important to understand how to take consistent trades so that you could start to scale up with how many accounts you have. It's a very simple process. You pass the evaluation account. If it's a 50K account, they want you to hit $3,000 in profit, and you have a trail stop of $2,500. So in reality, guys, you don't have a $50,000 account to trade. Your account's really about $2,500, because if you lose that $2,500, then you blow the account and you could start over. That's fine. But you don't really want to trade with the mindset that you have the full 50K to trade, because that's when you're going to start taking bigger losses. And that's why some of their rules are very important that we keep an eye on, especially their 30% rule. And I'm going to cover that shortly, guys, on how you could use the 30% rule and how much you really should be risking per account size. Step 2 is you get funded. So you pass an evaluation account. They give you a fresh new funded account. Your 53K that you're at because you passed the eval, they drop it back down to 50K. You're back to starting fresh, a new trail stop, and you're then able to take profits once you hit a certain threshold. Withdraw profits and you keep 90% of your earnings, and there's no long-term contracts. There's very flexible rules and scalable opportunities. There's up to 20 accounts. You're always able to get a larger account size if you're looking to take more profits out. And after your 5th payout, there's no maximum payout, right? You could take out your full profit that you have on that account. So tips for each account size, guys. A 25K account, your goal is 1,500 and your trail stop is 1,500. So to trade a $25,000 account, as if you have the full 25, well, then you'd only risk 2% of your account per trade. That's $500. But if you're trading a $1,500 account, which is our trail stop right here, you don't want to trade $500 per trade because that's one third of your trail stop. If it's one third of your trail stop, you're going to blow that account in 3 trades, at least 3 trades. Plus, we want to make sure that, hey, listen, if you're risking 500 on a $1,500 account and you lose that first trade, guess what? Your mental, because it's all a psychological game when it comes to trading as well, is going to be skewed and you're not going to be able to take that next trade appropriately. So instead of risking 2% of 1,500, which is only $30, because it's a prop firm and because they are fairly cheap, I would say a good real risk per trade on a 25K account is $150. Now, the reason for that is because that gives you 10 incorrect trades in a row with the same set risk for you to blow the account. And if you are taking 10 wrong trades in a row, then it is time to sort of take a step back, reevaluate the situation, reevaluate your strategy, and start from step one more time. For the 50K account, same situation, right? Our target is $3,000. Our trail stop is $2,500. 2% of 50K is $1,000, but we don't want to risk a third of our account, which our trail stop is $2,500. So that's more than a third right there, guys. 2% of $2,500 is only $50. And if we're risking $50 on a goal of $3,000, we might be here for a little while. So it is good to have a small risk, but it's also important to be reasonable, right? Because we want to be reasonable with the markets as much as we want to be reasonable with these accounts. And if your real risk is $250, again, same situation as the Fit 25K, that takes 10 incorrect trades in a row to blow this account. At that point, we want to reevaluate our situation, review our trades we were taking, and journal. 150K account, guys, this is where things start to sort of separate a little bit, right? So our goal now is $9,000 with a trail stop of $5,000. So instead of it being almost a 1-to-1 risk to reward for goal and trail stop, it's almost a 2-to-1 where you got to make almost double of what your trail stop is, which makes it a little harder on the risk management side. So if you were risking 2% of 150K, however, that would be a $3,000 risk. That's over 50% of your trail stop. That is a no-go, guys. That is absolutely poor risk management. It's not what we want to be doing. 2% of 5,000, however, is only $100. Same situation. If we're risking 100, we're probably risking 100 to maybe make 300. That's going to take us quite some time to hit our goal of $9,000. So that would be better off $100 risk, $150 risk. Go trade the 25K account. It's more reasonable. The goal is a lot more achievable. And when the goal is more achievable and reasonable, then we're able to really start to see our winners add up and start to see some payouts. And as new traders, guys, that should be your first goal. Your goal shouldn't be to become rich from trading. Your goal should be to be consistent from trading. If you could be consistent and prove to yourself, my worst days, I'm only losing 200, 300. My best days, I'm making 700 to 1,000. I have good risk to reward. I'm risking 150 to make 450 to make 600. That's fantastic. That's sort of our goal as traders, is to be risk managers and portfolio managers as well if we are long-term investors. Now, look at the 250K account, guys. Our goal is $15,000 with a trail stop of 6,500. So that's almost a 3-to-1 at this point for your goal and your trail stop. So again, if you're risking 2% of a $250,000 account, you're risking $5,000. That you would blow the account in less than 2 trades. You'd blow the account while you're in the middle of one of your trades. 2% of 6,500, however, is $130. We're not risking 130 with the goal of 15,000. That's very unrealistic. We want to come back to the realisticness of the market and of our goals and of our accounts. We want to have realistic goals that we can meet so that we could see some consistency in our journey. If we tell ourselves, I want to get a 5K payout, I want to get a max payout, I want to get whatever the case may be, 20 accounts copied all across, but you're still hitting a point where, okay, when you get to point A, B, and C. C, you really have a trouble from holding your profits. You see that you're in good profits on your funded, and then you oversize because you're excited, and then you blow the whole thing. Well, sometimes psychologically, we might have to take a lower and slower approach. Instead of starting right away with 20, maybe start with 5, maybe start with 3, because what that does is it psychologically gives us the benefit of the doubt to take things a lot more cool, calm, and collected, to say, okay, I have 3 copy accounts right now. If I do stay consistent, I can make X amount across these accounts, and that's great. That's phenomenal. I mean, if we're on 50K accounts, guys, and the max profit we can take out is $2,000 for every 8 trading days, that's $2,000 an account, $4,000 for the month if we were to get 2 payouts in that month for 1 account. So if you had 3 accounts on that, 4,000 times 3, we're looking at 12 grand a month. That's a great starting point to look for, right? We shouldn't want to try to get rich quick in this. We want to get consistent, because the goal of trading is not to get rich quick so we could just live it up. The goal of trading is to replace some sort of passive income, or to create some sort of passive income where we build enough with trading that we could start to invest in other places. But the point of trading is so we could be consistent, so we don't have to rely on any type of boss or any type of situation like that. We could trade freely, we could show consistency, and we don't have to worry about anything. Financial freedom and time freedom is what comes with trading. Account sizes and 30% rule. Guys, a lot of people worry about the 30% rule when it comes to Apex Trader funding, and I completely understand to a point, but in all reality, guys, we shouldn't be risking these large amounts on these accounts anyway. So the 25K account, max risk for the 30% rule is $450. We just went over the 25K account. Your max risk should definitely not be $500. That would be that would be the 2% rule on a 25K account, which is way too big. And 1,500 is your max trail down. That is way too large. If we take one trade and lose $450 on it on a 25K account, we're over leveraging and we're oversizing. We might want to look to trade something like the micros then, so it could help us move forward. We have the 50K account is 750 max risk, 100K is 900 max risk, 150, 250, and 300. You guys take a quick look at that. Now, obviously, they move up as they go, but we'll never really see something that's very high up there. As we see, even on the 250K account, your max risk is 1950. Now, we had over here, your max risk should really only be about maybe 650, maybe 1,000 at that too, because again, we want to give ourselves, 5 to up to 10 at least wrong trades in a row, so that if we take 2 or 3 at the beginning, we're not shook and we're not mentally exhausted, because when we're mentally exhausted, we can't focus right, and that leads to improper trades and poor execution. So there is no major sale running right now, guys, for Apex Trader funding. However, if you do use discount code FFever for Futures Fever, that does give you 50% off. I do believe it also comes with the 50% resets as well. Now, Apex has paid out, guys, over $517 million since 2022. So, if, you ever worry about, does Apex really pay out? Are you sure? I've seen people get denied before. The people that are getting denied are the people that are over leveraging, that are breaking the 30% rule, that are sort of considered gamblers in the trading world, where they might get a 50K account, a $2,500 trail stop, and they might take 5 mini contracts right out the gate, which is way too heavy in size, pass the account in one day, get funded, do the same thing the next day. And now this could be great and this could be helpful, but these people should be trading more consistently on their own profits on their own account. The reason they're doing this on prop firms is usually because they can't find consistency in the long run with whatever strategy they're trading with. So guys, don't forget, win a free Apex evaluation account. Last week's winner was Daniel. Congratulations, Daniel. You win a free Apex account. You get to pick whatever account size you want to choose from 25K to the 300K account. So whatever you choose, just make sure you fill out that form in the comments below, guys. Win a free Apex Trader evaluation account. It's in the comments below. We're going to pop that on the screen as well. Join us live every Wednesday at 11:30 a.m. Eastern. Now, we used to have Peter Tuchman and David Green on here as well. Hopefully, they'll be joining us again in the future, and they'll also give us a bit of an outlook on the markets and what their thoughts are going forward, too. So let's break down some markets as well, guys. I wanted to show you what exactly is going on. So here we have the ES futures chart. This is the ESU. So this one is the contract that expires in September. So this one has the most current volume right now. Now, the reason I came over to the ESU is because on my ES regular, the ES right here would be the one exclamation point on TradingView. This is where I have my regular drawing. So we're going to go over to the regular ES and we're going to look at that September contract, and we're going to do a bit of a top-down analysis where we look at what geopolitical events were happening that caused the markets to give us a move, because that's what gives us market structure, trend, and reversals. So I know that right up here, this is when Trump started talking about tariff scares, right? So tariffs on Canada. Remember, guys, it was on Canada and Mexico at first, and we were worried about, okay, well, what's oil going to do? Oil ended up giving us a very strong rally in December. Then once these scares came in about tariffs, oil crashed very strong, went from about $74 a barrel to, I think at some point it went below 60, which was a huge sell-off on oil. So this is the tariffs on Canada and Mexico. This was the scare. So that's what gave us an economic reversal. So up until then, I know you can't see it on the screen right now because it's only the September contract and it just started picking up volume around January. But we had a bullish move, right? Markets were bullish going into the tariff uncertainty. Once we had that tariff uncertainty, we started moving lower. And it wasn't until we got our first tariff deal, right? Our Liberation Day, he called it. That's in early April. That was tariff deal part 1. And we'll call it part 1 because there was a second tariff deal, right? Part 1 was when we had a tariff deal to say, okay, we're pausing all tariffs on all countries except for China. So let's make sure, okay, that's a good thing to keep an eye on. We want to make sure that do we have a new deal coming forward? But that first deal was enough to give markets enough steam and enough volume to reverse from here. So from all-time highs on ES over here, we sold off over 22%. Now, guys, please remember, to be in a bear market or to be in some sort of technical correction, we have to push lower than 10% from our all-time high. So we hit that 10% right over here around 56.28. So anything below 56.28, we'll call it 56.25. That is technically a correction or a bear market. So we had that bear market. We had that extreme sell-off, very strong momentum to the downside. And it wasn't until we got that tariff deal that gave us our reversal. Since then, we have been able to move up, and we could use our ruler tool. We've been able to move up over 25% from those lows, guys. It's a 25% return in less than 90 days on the ES, the S&P 500. That's a huge move right there. Tolls to buy BP. Okay, that's interesting. Speaking of oil, shale, and tolls to buy BP. Jay, good stuff, man. Good pointing that out. Always important to know what's going on economically, geopolitically, when it comes to anything. Oil, gold, S&P 500, tech, which would be the NASDAQ. We want to understand what the structure is and what is underlining or in the background that's causing things to move and occur. So that's where we would get tariffs on Canada, tariff deal number 1. Then we had our strong area of resistance we created on the ES here. Now, this was a point that I was watching, and I was telling some of the people that I trade with, and you guys could trade with me Monday through Friday, trade at bullishbears.com. You could feel free to join our community. But what I noticed was, guys, we have a major area of resistance. If we look back, this was a very strong point in the market. If we're able to scale above it, I want to see if we could hold it as support. And once we came into it, we showed a little resistance. We had a few selling opportunities up until we started to squeeze. Now, what I noticed when it comes to supply and demand is this was at first a supply zone. So we'll mark this red so we understand that we were looking for sellers at this point. And that's what we got for 1, 2, 3, 4, 5, 6 trading days. We did find a rejection up here in the supply zone. So it gave us a sell-off, right? It gave us our short opportunities. What's going on, Happy Journey? It gave us our short opportunities up here. However, we noticed that on the daily time frame, each time we sold off, it was weaker and weaker. So we could use our ruler tool. First time we sold off, gave us a little bit of a move, 120 points. Then the second time we sold off was when we came into it on this green candle. We just pulled back towards the open price, towards the close, only 40 points. Same situation. We kept failing to reject the supply zone, therefore price, and we could use trend lines to help visualize this. Price started to squeeze into this supply zone, which gave us almost like a bull flag pattern, right? Price was moving higher. We flagged on supply. We started to bounce higher. Then the supply zone that we have here, now we'll make it green, became demand. And look at that, guys. Perfect area of support. Sort of looking to see if we could double bottom in here. However, we got news. Remember, guys, Monday, Sunday into Monday, US bombed Iran, bombed 3 major nuclear sites. Guys, if you do want to be caught up with all these geopolitical events that I'm mentioning, make sure you follow me on Instagram is Trading with Kev. I also post very actively on our Benzinga Instagram social as well to make sure you guys are up to date on what's going on in the economy and what's really moving the markets. So we bombed Iran over the weekend, and markets gave us a very strong reaction. A lot of people were very uncertain, worried that a war might start brewing even stronger. Well, World War III per se. But what happened, there was also talk of peace. There was talk that they might not retaliate. But of course, that ceasefire also hit a bit of a brick wall recently. So right now, things are still up in the air. And because of that uncertainty, I personally want to be a little careful. Now, the first 2 days since we had the economic news, we had a reaction. So now what I'm going to do is I'm going to come back to my regular ES chart. We're going to actually look at the zones that I like to watch and I like to trade. So this is going to sort of be like how I do my pre-market prep. And I make sure to do my pre-market prep every morning between the hours of 8:30 and 9:30 because it gives me a better understanding of where markets are trading, what direction I should be looking for, and what zones I should be looking to trade off of. So I'm not feeling FOMO when markets are trading in the middle of nowhere. So the first thing I see and the first thing I always like to do is mark out a previous day high and a previous day low. Now, because we're currently trading on this daily candle, we're going to drag these higher, previous day high, previous day low. But something I do want to mention, guys, is now I see a pattern in the market, but that's with this daily candle not closed yet. So the pattern I see at the moment is we had Friday's high from this red basing candle. Then we had our green candle right here. We took out previous day high. We closed very green and very bullish. What happened the following day? Okay, well, Tuesday came. Tuesday took out Monday's high, just ran. It was bullish. What happened today? Well, today we took out that previous day high, but at this point, we're struggling to get back above it. So what I would do now is I would break it down to a 4-hour, 2-hour, 1-hour, 30-minute, and find some lower time frame zones that I might look to trade off of from this previous day, right? Where could price have possibly stalled out for me to enter my next trade on? Something I also like to do, guys, is when I'm looking at this higher time frame, is I'll use my rectangle tool over here, and you can get your rectangle tool on the left-hand side, or if you use your favorites icon, you could press your favorites on, and you could favorite whichever tools you want to favorite just by hitting the little star next to them here on TradingView. That way, it's easy access to them. What I like to do is I'll mark out some previous wicks on the daily and say, okay, well, this was a lot of rejection. This was resistance. Now, if I could find a support zone here on the ES that lines up or a demand zone, that's going to give me a lot more confidence because before this was an area where sellers were active. We flipped that. Now I want to see if buyers are active, right? Support becomes resistance. Resistance becomes support when we're trading. So now we could break it down lower. And the first thing I want to mention, and we'll make this blue for now so it's a different color so we don't get confused, is I do have some other demand zones here. And I see that I created some demand zones that are lining up within that blue area. So that's fantastic. Something else I want to point out is this red zone we have marked up here. And we can look at right now we're on the 6-hour. And it's not looking like we have anything too necessarily important right there. So what we can do is we could delete old zones. Guys, it's important to never, I always say, don't be married to an old zone, right? Because the issue with that is if we broke it already, we retested it, we broke it, we used it too many times, we aren't supporting at that area anymore, but you stay loyal to it, even though it's not loyal to price, then we're going to take poor trades off of a zone that shouldn't even be on our chart. So that's why it's also important to have these pre-market preps every day as well. So I'm really not seeing anything too strong, too significant up there, I should say. So again, we're going to go back to our 4-hour right here. We're just going to delete this out so it's no longer on our screen because if it's not relevant, we don't want to see it. So this was our blue zone. We do see price rejected this point 1, 2, 3, 4 times. So now 4 times, so the 5th time price started moving up into it. This is when we had the economic news, right? The Monday goes into Tuesday. We had a strong move. We broke. We consolidated into it. We squeezed. We could tell we squeezed here on the 4-hour because on the lower time frame, we could see that we consolidated after pivoting higher. We failed. We pivoted lower. So this is where our squeeze occurs. And then we have our strong breakout and hold. So this is where I would see, okay, it looks like markets are still holding a bullish foundation right now. I would want to see if I could find some long entries somewhere. So let's go down to the 4-hour and we're looking at the 4. I want to see if there are any old zones. We could also check the 6-hour too to make sure there's nothing relevant over here supply-wise that's broken, and I'm really not seeing anything. I'm going to lighten this rectangle a little bit, and now we're going to come down to the 2-hour. Give a quick little brief on this. Now, the 2-hour, something I want to mention is we had a major strong point right here. I'm going to delete this old line at 61.10, 61.14. Now, this was an area that price held overnight. Then markets opened and price held one more time when the New York session was open. And we could come down to the 15-minute and see that look at how well price was supported in this area. So we held this demand zone. Then what happened on the 15-minute time frame? We moved higher, created a new demand. So now 61.28 is the next point I would want to watch. Now we could also use our volume profile to help sort of see where there might be a low volume node as well. Now something I do want to mention here on the hourly time frame is we have our supply zone right here on the hourly that hasn't been retested. Now something I like to use with my supply and demand zones is I like to use them as what I call flip zones. So once we had supply here and we see we rejected it once, twice, 3 times, 4 times almost right here. Now, again, this 4th time is when we flagged and broke it. Something, again, to note with supply and demand is usually that last time we're about to break a zone that's been used, we sort of try to get a reaction and we fail. That reaction and fail is what some people consider a squeeze. And that reaction and fail is how we know that there aren't enough sellers in the supply zone to hold price lower anymore. And buyers are now taking advantage and pushing us higher. So I noticed, okay, we're creating some higher highs. Here we are on the hourly, creating higher highs. We tried making some lower highs over here, but at this point where price is more recent, this is now Friday, this is Monday, Tuesday, this is today's Wednesday, we've been making higher highs and higher lows. So right now to say we're in a bear market would be incorrect, right? We are currently pushing higher. And in fact, if we are on the daily time frame, we're not that far off of all-time highs anymore. Now we're only about, I want to say 5%, 10%. Let's take a quick look. We use our measurement tool, mark out previous day's close, and measure that up to our all-time high. 2.3% from all-time highs, guys. That is phenomenal. That really is quite the move, especially considering in early April, if you told somebody we're going to be near all-time highs soon, they would think you're crazy. They'd say, what do you mean we just sold off 22%? What do you mean we're going to be near all-time highs? Well, that's how fast markets react. That's how fast direction could change depending on the strength of the geopolitical outcome, right? And that was the tariff uncertainty followed by the tariff deals. So we had the 22% sell-off. From there, we moved up over 25 to 26% as well. Same situation with the NASDAQ too. So that's sort of what I'd be looking for on ES. Now, right now, all I see is we're building support while we're moving higher. So until we get some type of geopolitical news or some type of economic data, and we could check that right here. So again, this is TradingView. Come down to the bottom right. We have our calendar. Now for me, I have my calendar set so it's just the US because I just want to see what's going on in the economic news for the US because we're trading US New York session markets. And from there, I like to turn on high importance only. And I'll check to see, okay, what's going on today? Well, today's Wednesday, 10 o'clock, we had Fed Chair Powell testimony. Thursday, we have durable goods and we have growth rate quarter over quarter final. So that's at 8:30. So because these are high importance, because there are 2 lined up both at 8:30, I'm going to know that tomorrow morning at 8:30, 1, I'm going to want to make sure I'm not in any trades, but 2, I'm going to also want to look for the volatility to kick in and look to see how these reports come in as well. And if you guys do want to know how these reports come in, as I mentioned earlier, make sure you follow on Instagram as Benzinga, and I cover how these reports come in the same day and how they reacted from previous reports too. Are we currently growing? Do we have any weakness? Do we have any strength? Do we have any uncertainty? I cover that as those reports come in, guys. It's so crucial as day traders, as investors, to understand what's going on behind the scenes because yes, candlesticks and price action, patterns, support and resistance, they're very helpful. They do help guide us, but knowing what's going on could be the difference between selling in supply or waiting for that supply zone to break and use it as demand, right? Because if we know ahead of time that we might be in a stronger market while we're pushing towards the supply zone, everybody hitting that sell button at resistance, we understand there's a very poor chance of that happening. We wait for the pullback, we enter when they're getting stopped out, and we're able to take some nice profits. I also see on Friday, 8:30, we also have personal income personal spending, and core PCE price index. Again, this is a month over month as well. All three of these are. This is also going to give us a little volatility. This is Friday. So now I know Thursday and Friday are both going to have some strong economic events coming up. So now I could close out my calendar and I could say, okay, well, this was the ES. This is how we have support on the ES. Now, guys, if you want, let me know in the comments what futures you want me to cover. For right now, I'm going to go over to GC, which is gold. Next, guys, we could either cover oil, or we can cover something like platinum or the NASDAQ. And a lot of people trade the NASDAQ. I do feel like when you do a mock trade setup like this on the ES, it also gives you some sentiment as to the NASDAQ as well. But something to mention with NQ, which is the NASDAQ, is it has a lot more volatility. The ATR is much higher because NASDAQ trades right now, guys, around $22,000, I believe, 22,456. Where the ES is trading at 6,146. So it has a lot more volatility, it has a much bigger ATR, so we want to be much more careful when it comes to trading it. So let's take a quick look now at gold and see what's going on with gold, because gold had a sharp move to the downside, even though there was a whole lot of uncertainty and worry of war. Now, guys, when there's that worry of war or economy worry or the dollar's pushing lower, a lot of times that leads to bullish reactions on gold because gold is considered the safe haven. Now, because gold has been reacting poorly and it's been selling off, that's a bit of a red flag for me. That tells me that, okay, well, then there's a chance that maybe this isn't going to roll over into a much stronger war until I see gold start to find some momentum too. Maybe even that dollar starts to drop as well. We could take a look at the DXY is the dollar. And right now we're on the daily. Now the dollar, guys, I covered this as well just this past, this is Monday the 21st in April. No, it was this one right here, June 12th, guys, earlier this month. I covered that the dollar hit a 2-year low, was really a 27-month low. When that was happening, gold, and we could come back over to gold, was hitting all-time highs. So again, they inverse each other, the dollar and gold, because when people are worried for the dollar, gold is the safe haven. So again, look, coming back to gold, we could do our markup on gold and see what's going on this higher time frame. Now, as you see, I could mark out a previous day high, a previous day low, and this pink level is what is the open price. So I like to mark out the open price on the daily candle because that gives me an idea to say, okay, if we're trading above the open price, we're currently on a green daily candle, and if we're above the open price, we broke previous day high, I want to stay bullish, right? This helps give us a definitive direction so that we're not trying to second guess everything we see. And that's what structure and a good trading strategy does for us, guys. It gives us the benefit to say, okay, this is the rules I follow. This is the strategy I use. This is the system I use. I can't go outside of that. And once you find a system like that, guys, trading, it's a lot less emotional and a lot less reasonable. And once we find that reasonable, we're able to be consistent. So here we have the 4-hour. We're going to delete this green zone here. And again, as we see, we had a lot of support that started to build up on gold. However, that support failed. So we're going to delete that broken daily. We are going to, we'll keep this 45-minute for now. This level will delete. This level was broken. We'll delete that too. And now we can sort of see, okay, we're here on the 4-hour time frame. Something I like to look for is those supply and demand zones. So the first thing I see right here is we have our basing candle near a high, and then we have our sell-off, and we have our continuation. So that tells me that there was a lot of sellers at this price level up here around 33.96 to 3,400, which 3,400 is a key psychological level, guys. Key psych levels along with our zones or our price levels give us an extra confluence to give us confidence. So here we have our 4-hour supply zone. We're able to mark this out 33.96, and I have S 4 hours. So I have all of my zones preset, so I don't have to type it out each time. And now I can say, okay, well, there's my 4-hour supply. Do we have a 3-hour supply that formed? A 2-hour supply? And I also want to look for any demand zones that form. Now, because we sold off recently on gold and we really haven't gotten a bullish move, I don't think I'm really going to find that many demand zones down here. So I'm more focused on finding any possible supply zones for short entries. So now here we are on the 2-hour. Again, just looking back and forth to see if we have anything. I'm looking over here for demand because this is the last time we had a bullish move, and we could come back towards that 3-hour one more time just to sort of see if we do have anything sitting down here. And I'm not really seeing too much. I had this blue zone. This was a strong area of support, and it still held as support. It would support 1, 2, 3, 4, now 5 times. So support along with demand. This helps give me extra confluence, extra confidence. So what do we see now? 3 hour, come down to the 2 hour, 1 hour. And I'm looking to see, okay, well, this was a demand zone, which means it was a support area. And I see that it held as support, but now we broke it. So now we have a break of it. We retested it and pushed lower from there. Now I know we have a new supply zone here too, because we have our basing right in that same spot that we had that demand zone. So again, a support becoming resistance. They flipped. Now the resistance becomes support, or whichever direction we're going in. Fairchild asks, any idea when or if the 80% discount will happen again? Yeah, Fairchild, great question. Apex runs discounts all the time. So I'll pull up the Apex website for you guys, and we'll take a quick look at it. And with Apex, so right now, if they are running a sale, they'll have a little box right over here, and it'll tell you what sale they're currently running. Right now, there is no sale, but if you use discount code FFEVER, you do still get 50% off. So you still do get a discount, so you won't ever pay the full rate if you do come down to these accounts. They have wealth chart plans, they have rhythmic plans, and they have Trade-Ovate plans. So if you get a Trade-Ovate plan, let's say you want to do a 25K account, it says $147 a month, right? It's a monthly fee when you're on an evaluation account, but it's not really that $147, it's 50% off, so it's about $70. Now, obviously, the 80% off gives us a much better sale, only brings it to about $20 to $30. So definitely good to make sure to, if anything, you also stock up when they're on sale too, because a lot of times when they're on sale, guys, they'll put sales on the resets. So let's say you buy an account on Monday, the sale ends on Wednesday, you blow the account the following Tuesday, there's no sale anymore. Okay, well, you might still have an account that had a reset sale. So the reset might only be, let's say, $40, while a new account is $70. So now you just use the reset on the old account that you had. And that's a good way to use the use Apex and use their sales as well. So not just for the evaluations, but also for the resets. So here we have the gold on the hourly. We're going to mark this out. So now what we're doing, guys, is when we're making new supply zones, making new demand zones, what we're doing is we're seeing the range. We're visually putting the range on the chart for us, so we're no longer questioning our zones and price levels and how wide of a range we might be trading in. So if I see that here on gold, we were moving lower this day, this was Tuesday, I would say, okay, well, right now we're in an area of support. I wouldn't want to take any shorts, but we also have a new area of resistance, this blue zone, which was support. Now that we're below it, it's resistance. So that's a very small range on gold, very, very small, only 11 points. Usually we get maybe 20 points, 30 points of a trend when it comes to gold, even 40 points some days. So a 10-point range on gold is a very tight range, and we do not want to be caught up in any type of chop. So it's important to understand market range, dynamics, structure, and trend. So here we have, this is our volume profile. Now, something I'd like to mention, guys, when it comes to trading gold and oil. Now, here's a little trading strategy tip for you guys. So anybody sticking around, make sure you hit that like button on YouTube, hit that like button on Twitter, hit that share button too, because this is going to be some gold right here. Now, a lot of people use fair value gaps, and that's okay. That's great. Fair value gaps are an okay strategy to use, but it's important to not just mark out every fair value gap you see, because they get very overwhelming, and you're going to start marking out too many of them, and you're going to start questioning every zone. And when it comes to creating zones and price levels, we want to find a system that we could use and have strength behind and not want to question. We don't want to question ourselves in our trading. We want to be questioning the market, and the market should be answering those questions with, yes, confidence and confluence, or no, stay away. So with that being said, guys, right here on gold, we're looking at a 45-minute time frame. We have a fair value gap. Now, normally I don't mark fair value gaps out unless they're on a 15-minute or a 5-minute, and that's usually from intraday as well. But something I want to point out here, guys, here's our volume profile, and our volume profile starts over here from Sunday's open. We have a very low volume node up here. So something I would recognize, and now we're going to remove this blue zone because now I no longer think it's relevant. I can see what this white price level is too. You could even delete that too. And now I see we have our volume, our fair value gap, and a low volume shelf. Now, a lot of times, guys, when we move into these low volume shelves, people are expecting us to soar right through from one shelf to the next. But what happens is in these low volume shelves, that's what's called an imbalance. Now, usually when we're in a price range, we see that volume profile is very heavy, and our range is usually from the high to the low of that volume profile. So we see our low is down here, or even our low is in this green zone. So every time we came to these low volume nodes, we found support, we moved higher. We came down to the low again, we found support and moved higher. Right now we're range bound, so we wouldn't look to trade this. However, at this point, because I see a new pattern in the market, I say, okay, well, check this out. When we break these recent highs, we reject it and we move lower. We broke this recent high, we rejected it, we moved lower, broke this high, rejected it, and moved lower. So now what I would look for is I'd look for that same price action that we break this high. We're in this low volume shelf. I'll move it over so you could see how it lines up directly with that low volume node. We could take that short once we see some selling pressure step in there. Do apologize. I think my trading view's hitting a little bit of a wall there. I'm moving too fast for it, guys. So we could say, okay, this might be a good spot that I want to look for some shorts. Now, the reason this is also a valid short position, guys, is because we're not looking to short it on a breakdown, right? Now, breakdown trades or breakout trades, whichever direction we're trading in, tend to fail a lot more times than they succeed because price and institutions, they say, are expecting people to try to sell those lows or buy those highs. So instead of doing that, we want to sell the highs and buy the lows and just expect price to be range bound because price historically ranges 80% of the time, guys, and that's on every time frame. So we want to make sure if price is historically range bound 80% of the time, I want to have a trading strategy that I could use 80% of the time. And that's going to be something like a volume profile, a low volume node, supply and demand, and trading the ranges. So this would help give us confidence in a short position. It's also near the 3350 area. That's a key psychological level. So there's a lot lining up here to help give us confidence in this short trade on gold. And especially that we've been trying to break these highs and rejecting lower. And we have a low volume shelf right there as well. So because of all of that adding up, I would pull out a tool like Bookmap, which shows me order flow, and say, okay, what's going on here? Do we have any passive sellers at 33.51 that I could look to take this short position with, right? Because when I'm taking a short position, and at this point, guys, we have to recognize that if we're taking this short up here, we're selling the highs. So we don't know if this short position is going to work out because we just had a rally going into it. However, we know that there's a lot of traders taking that breakout trade. There's a lot of people feeling FOMO after the bulls took control. I don't want to be one of those traders. I want to be fading those traders. To say you're fading something in the market means you're shorting it. So let's take a look. This is gold. Check the 30-minute. Now, because gold's been so range bound, we're really not going to find any valid supply or demand zones either. So now let's take a quick look at crude oil. That's going to be CL. And we see that crude oil had a massive sell-off, guys. Believe it or not, crude oil had a crazy sell-off. So if we come back to our daily time frame here on oil, this is where things go crazy, man. I mean, let's go replay system for just a moment and show you guys how out of the ordinary this move was right here, especially with the news coming in and everybody. Guys, if you're on social media and you're a trader, you know that everybody was bullish into crude oil this day, especially because the whole us bombing Iran, the war in the Middle East, it's going to have a major impact on oil markets, oil supply to China, everything, right? And if it has an impact on oil supply to China from Iran, and that's due to America's conflict with them, well, that might increase America and China tensions. And when that happens, that's a huge red flag. We want to be careful. Now, back to this crazy bull move here. This is something that I was watching for on oil for quite some time. Now, right over here, we were trading at this point on oil. This is early June 5th. We were still trading below my strong area of support. So the 62 to about 63.30. This was a major area of resistance. We see that we held it as resistance for a long time. It was support. So we said, guys, I really want to see if we could squeeze and break out of this zone. And that's exactly what we got. We got our squeeze. We broke out. We retested it and held it as support one more time. We made our way towards very close to a weekly supply zone. We do end up hitting that weekly supply once we have that gap higher. We'll see one more candle, and you'll see that crazy sell-off we had, guys. That was insane. Where is... There it is. I mean, this is we gapped up from oil, guys. We could look at our ruler tool from our close to our open of that next day, and it shows us oil gapped up 5.6% to the upside. So oil closed at 73.84 a barrel, opened at $78 a barrel, $4 move to the upside. Everybody was screaming bullish on oil. I was a little hesitant because guess what, guys? We were still, now we're zooming out because now we're looking at a daily and a weekly time frame. This was a major area of resistance. Sellers stepped in each time. And now with everyone being bullish on oil, what does the market love to do? And guys, I want to see some answers in the chat. What do markets love to do when everybody's going in one direction? Everybody's bullish on oil. What's oil going to do when we open? It's going to sell off. It's going to hit that sell button, and those people holding longs from over here, those people trying to buy the highs over here, I mean, from $78 to now lows recently of $64, 78 to 64, guys. That is an enormous move. 18% on oil in a matter of 2 trading sessions to the downside. That is wild volatility. And we look for this volatility as day traders because we could take advantage of it, guys. If we see that oil selling off real strong one day, then why not look and take advantage of it? Now, I have an arrow up here. I'm going to show you guys here on oil. I actually took some long positions this day, and this was after we had our big pump higher, which wasn't even a pump. This was a gap higher. Then we had our sell-off. Now, this was coming into the New York session, so around 8:30 to about 9:30. I was taking some long scalps on oil, was catching some nice risks to reward on them, just small scalps. I think they were 3-to-1s, 4-to-1s, stuff of that nature. I was using Bookmap with it. But then at this point, it was about 9:35, 9:40. Trump tweets and says, there was a headline where Trump said, "Everybody keep oil down. I'm watching." And then he tweets and he says a bunch of other things about oil. And because of the impact that Trump now has on the market, on the economy, on the globe at this point, because remember, guys, he's not just Donald Trump. He is the president of the United States. And we see that he's making a very huge impact. We want to be careful. We want to know when he's saying things. When that happened, I closed my long position because originally my long position, I wanted to target 74.60 because we had some passive sellers up there. But once I saw he tweeted that, I immediately closed my longs because I knew that, hey, guess what? This guy, our Mr. President right now has a very strong impact. These headlines are major, whether it's Trump, whether it's from Israel, whether it's about Israel and Iran. They have a major impact on oil markets. If I'm in good profits right now and a new headline comes out that might throw some caution to the wind, what's the best thing we can do at that point, guys? The best thing we can do is close out our trade, lock in profits, call it a day on that setup, and wait for that reaction. Now, Kevin, what if markets reacted bullish to that? There is no what ifs in trading, guys. I need you to take what if out of your dictionary when it comes to journaling and when it comes to trading, because what if you just gave yourself a proper setup that you followed every day? What if you gave yourself good structure in the market and in your morning routine? That's what's important, guys. That will keep you in the long game. Remember, guys, it is not I'm profitable one day, I'm a green trader, I'm profitable. No, it's a consistency game, guys. Prove to yourselves that you could max risk 100, 150 to make 300 to 450, right? Because again, that is still a great profit. I mean, people go to work sometimes. People make maybe $300 a day. If you could trade from home and take very small profits, take very small risk, do that, guys. I cannot stress that enough. Unfortunately, in a day and age of technology, of social media, there's a lot of traders online that all they do is they flaunt their profits. They show you, I made $200,000 last month. Here's how I made $30,000 trading NASDAQ today. And that sets unrealistic expectations. People end up following them. People think they could do the same thing. All I have to do is copy this person. I got it, no problem. That is never the case, guys. Our job as traders, and my job personally too as a trading mentor, is to teach you guys abilities, trading setups, and trading routines that you could follow to be a proficient trader on your own. The goal as a trader is to be independent, right? We want our financial freedom and we want our time freedom, right? That's the whole great part about trading too, guys. I can't tell you how many times I've taken a trade even before market opens on like gold or oil, because here's another quick tip for trading oil, gold, ESNQ, CLGC. CL and GC do not need that New York session volume. So we might get a good move on gold, on oil before market opens. This trade I took here was 905. This trade I took here was 920, and I closed it right when the 930 candle was about to close. So I took that into open, and we really didn't get that strong of volatility coming in at that point. And my mouse just disconnected, and it's back. That's great. But my point with that being, guys, is have some rules you follow, know what you're trading. And I guess my point, going back one more time, is getting the freedom, getting our time back from trading. I could be done trading by 9:30 and go about my day, go for a walk, go to the beach, do whatever I like to do or whatever you like to do. Because once you get that profitability, once you get consistency is key. It's a saying for a reason, guys. People don't just say it for giggles, you know? People say it because it means something. It warrants strength, it warrants consistency. If you could be consistent and start with it consistently, not blowing your accounts. Guys, something I recommend to a lot of traders is when they begin trading, don't worry about how much you're making a trade. Worry about how much you're losing on your losing trades. If you're able to really, really minimize your trades to $50, $100, $150, and maximize your winners, 400, 500, whatever the risks or reward may be, that's how you see consistency faster, and that's how you see profitability a lot faster too, because then you're no longer trading with emotion. When you know that your losses are set to a very small risk, you know your rewards are set to a very high reward. You know that I could take two winners, make 600 on both of them, be up $1,200, take two losers, lose 200 on both of them, and still be up over $800. It's a 50% win rate and still profitable, guys. That is huge. So make sure, guys, risks or reward, very important. Keep an eye on those losses. Never risk more than you're willing to lose. Whether you're trading a prop firm, whether you're trading your own capital, you want to make sure when it comes to trading a prop firm, you're treating it as if it's your own profits, it's your own account. Even an evaluation account, you want to trade your eval as if it's your full account so that you're not putting too much risk on the table. And so when you do get funded, you're already trading the same strategy, the same system. If you start going too heavy in size on the evals, you're blowing one day in, day out, that's going to show you a lot of inconsistency. It's not going to show you anything that you could really backlog and learn from. And when you're doing things in the market that you're not learning from, you're really stalling out. And that's when you know you're not progressing, right? You're not progressing further in your trading journey. Our goal as traders is to progress further every single day, guys, right? There's a big saying, and has nothing to do with trading in general, right? Our goal as traders, our goal as humans, get better 1% every day. Trading is all about compounding, being able to say, I risk 100 to make 300. Now I risk 200 to make 6. Now I risk 2,000 to make 6,000, of course, at some point over time. But having good risk to reward, having good consistency, that has to come first. And a lot of times traders, no matter how long you've been trading for, if you haven't hit that consistency level, size down, take it slow, review your strategy. Your number one goal when you're a beginner trader isn't to make money, it's to build a system you could follow day in and day out. So let's take a quick look. This is oil. And again, we looked at the daily time frame. We saw a major pullback. Now, guys, believe it or not, I'm not going to go bearish on oil until it could get back below this price level again, this 63, 62 area. We'll call it 62 because that's the bottom of the zone. But if we could somehow move into the 63.30 area and find some support, I would actually look for some longs on oil there. And that might actually be a good possible spot to swing trade some oil. Now, guys, for swing trading futures, you really can't on prop firms. However, if you were looking at swing trade stock, if you're looking at swing trade stock on oil, it would be USO. That's the United States Oil Fund. So you would buy USO, you look to swing trade that, maybe look to see a 16% return on investment. If we could come back into that zone. Now that zone is about, it was 62 on CL. I want to say it was about here on, let's see, there we go. So there's USO. We'll take a look at CL. Yeah, it's about there. So the price is a little different, but it follows the same direction and it follows the same trend. So if you were looking for swing trades on CL, you would swing trade some stock on USO, which also has options on it as well. Guys, make sure you're hitting that like button. I do appreciate you all for tuning in today. And don't forget, fill out that form in the comments to win a free Apex Trader evaluation account. You win any account size you're looking for. Fill out the form now. You'll get an email by Friday if you win. And I also announce it on the next episode of Futures Fever. Hopefully next week we get some price action that we could trade off of, right? Hopefully by next week, maybe we get oil moves into the 63.40 area. We find some support. Perhaps we even find something on gold that we're able to trade off of. Now, real quick, I want to look at gold one more time on the daily, and I see that, okay, well, actually, let's see. I was going to say, did we get that set up? Nope, we're still pretty far from that. But looking at gold here on the daily, and gold is very range bound, guys. So what I love about gold, oil, and QES is it gives us the ability to trade different markets. So if I see that gold is very range bound, but crude oil is giving us a clear direction, then I'm going to leave gold alone and I'm going to trade oil. If I see that oil's range bound, gold's range bound, but ES and NQ have found some direction, they found some strength, right? Because remember, guys, these markets don't inverse each other. Gold doesn't inverse ES, but they have a bit of a pull on each other, right? Because if there's uncertainty and worry in the economy, worry in stocks, and let's say ES and NQ, they're range bound, they don't have much volume, there's a good chance that perhaps people are taking out some of the volume from stocks and equities and putting it into some type of safe haven like gold. Now, of course, we were expecting gold to react a bit stronger due to that bomb on Iran, but we have not gotten a strong reaction here, right? Gold usually performs very well in times of uncertainty, in times of worry of war. That is not what we got on Friday into Monday, right? So this was our Friday candle. We bombed Iran. We gapped up a little bit, but we ended up selling off just like oil did. So really want to be keeping an eye on that. Gold is very range bound between, we'll call it 3,200 and 3,463. So that's a pretty wide range, guys, right? So I'd look to maybe buy the lows and sell the highs. So we're range bound. Right now we're trading in the middle. So I don't want to take any trades on gold. This is a no trade zone, guys, on gold. If I'm looking at something like oil, we've been selling off the past 2 days, just the past 2 days. Volume did pick up very strong. So what I would look for is I'd look to see if we could find any resistance levels up here to take a short position to target this area of support. Now, something I will also mention, guys, is if we don't get into this area of support again, let's say this daily candle's bullish, what I would look for, a big clue for me, would be is if we could break this previous day high over here, 67.83, and close above it. Now, I would look for this close above the 67.83 either on today's daily candle, which right now we're pretty close to 66 even, so about $2 away, or on tomorrow's candle. So what I'll look for tomorrow is I'll look to see if this daily candle moved higher, if we found any support. So now I would come down to a lower time frame, 3 hour, 2 hour, 1 hour, and I'd look to see, do we have any demand zones that formed, any areas where we based and then had a rally. First thing I notice once we look at these charts is it's squeezing these price candles down here because of how rapid these were over here. So we could zoom in, we could take a quick look. I don't see much support. Come out to some other time frames, and again, I'm really not seeing much support forming down here. So we'll have to see how market structure forms on oil to see if it wants to possibly give us another short position around that 69 price level to target that 63.30 point. Now remember, guys, something to note on oil now is our recent price action is when sellers step in, they have a lot of strength. Sellers step in, a lot of strength. Even yesterday, buyers tried to step in, it looks like in the morning here. Let's see. Look at this. Every time buyers tried to step in, they rejected lower, rejected lower, rejected lower. And each time they rejected lower, sellers had a lot of strength, right? Buyers had to chop their way higher. They took time. Sellers came in. They launched us lower very quickly. When we see that we can move in one direction over the other a lot faster than the other, then we know that that direction has the momentum. That is our direction we want to trade with. One more quick glance on the 15-minute time frame here. Again, just sort of seeing if we do have any possible supply or demand zones. Really looking for any possible supply zones up here because of the sell-off we had. but I'm not seeing anything of significance. Nope, really not seeing too much. If anything, what I would do, guys, is I would mark out right over here. So we have our basing candle here. We have a little bit of a move lower, but there was no continuation. So I wouldn't mark this as a supply. However, I would mark this area out to say, okay, well, it looks like every time price moves into this zone on oil, at some point it was support. We broke it, now it's resistance. So now I have my range on oil, 66.40 to 64.40. So that's a $2 range on oil. We could look to sell the highs, buy the lows, and trade that range profitably. All right, guys, I hope you guys enjoyed today's show. Hit that like, hit that subscribe. Do appreciate you all for joining, and I will see you guys next Wednesday. Make sure you follow me on Instagram, is Trading with Kev. I post daily market recaps in the mornings and the afternoons, and I also cover economic data that comes out here on the Benzinga channel and Benzinga Instagram as well. Take care, everybody. I'll see you next week.